So let's talk about Bollinger Bands and the VIX, because that's all I really use to do my wheel strategy. And that's what I've been using for the last few years, and it's done really well for me. So this is a quick video on what I do. I just went over this with people that I help do the wheel strategy. And if you want to look at that, got a stand store, check it out. You don't have to, because I'm going to teach you everything right here. So this is what we're doing here. Let's jump into my desktop and let's just look at Palantir chart just to look at it. So what I have here is the Bollinger Bands. We're on TradingView. All you got to do to get Bollinger Bands is indicators right up here, and look at Bollinger Bands. And this is going to show you two standard deviations from the current stock price. Two standard deviations up, two standard deviations down. Technically, or simply speaking, the potential of how high something can go and how low something can go within a certain amount of time. So I personally look at this on the 1 day and the 5 day, which they should technically look pretty similar. And what you want to do is that when you look at it, when things are this close together, right? If everything's super close together, that means there's not a lot of volatility in the market. That's pretty much the first part. If there is a wider, see how wide that is? A wider spread between the standard deviations, that means there is a lot of volatility in the market. And when you see those type of things, right? For options sellers, that's where the biggest amount of premium you're going to get. That's where the premiums are going to be a lot higher, because with volatility comes bigger money. And if you want to look at volatility, that's when you look at the VIX. So when you're looking at the VIX, and normal is anywhere from 12 to 20. But if you're like how we were or are for the last month or so, we've been at way above 20. We've been above 20 for a while. Anything above 20 means there's a lot of volatility. And if the volatility is up high on the VIX, right? If it's above 20, that means you could pretty much look at this as the fear indicator, right? If there is a lot of fear in the market, for the most part, the stock market goes down. So all of these upward trends means the stock market goes down, and all these downward trends means the stock market goes up. So simply put, VIX volatility index, that's what you have to look at. Super simple stuff. You could look at the scores throughout the whole day. It's not bad. We've been dropping down for a while now, and hopefully that means we're going to see some easing up on the market, and we'll be able to have better predictors to see how the market goes. So tech stocks, most volatile stocks, but Palantir is what I wanted to look at because I have a significant amount of shares of this, like 600 shares, and this is probably the play that I personally would do, knowing that earnings is coming up pretty soon. I think this is a week after earnings. I'm personally looking to sell put because I have a good amount of cash on hold, and probably around 24K, 25K I've on hold. So I would look for a delta of 20. It was 21%, kind of like it. And it's at 3, and we'd get paid $315 per contract. Say we do that, and we're going to put this all right here, continue. How many contracts? If we have 25K, let's do 3. That means we would need around 23K, 24K. And never look at this max loss right here. That's not possible. The only way we could have a max loss is if Palantir goes to 0. But we'll get paid $944 for a 3-week play to do this. 944. And let's just bring out the calculator really quick here. And the reason why I'm doing it a week after earnings is because I believe that Palantir is going to have really solid earnings, because I kind of feel like they have a monopoly on the AI government industry. So let's just do this. $79 times 3 times 100. $23,700. That's how much money we'll need to put out 3 contracts. So 944. Just making it 945 divided by 700. And that means we're making 3.9% because you times that by 100. You're making 4% on your money in 3 weeks. That is solid. And pretty much only 2 weeks, 19 days. That is a lot of money to be had to have it just sitting there. You're making way more money then it would be sitting in a high yield savings account, way more money than dividends, way more money than a lot of things. And that's what I love showing on this channel, is that this is how you compound things. This is how you compound your growth. And say, because you're getting paid $945 right off the bat right there, right? $945. What would I do with that really quick? I would go right into Sofi, because this is the stock that I personally love, and I would sell puts right here. Sell puts, you could do it for like a week or like 3 days as well. And we put it at $9 or $9.05. Let's see, whatever the delta is. This is right below 20 delta. And we would get paid $32 from putting that premium to work. So you're already making money off of your money, and then you're going to make money off of the free money that you just got. So you're constantly just compounding your growth, compounding what you're doing. As long as you're doing this with stocks that you want in your portfolio, want long-term in your portfolio, you're pretty much going to win like 90% of the time. And that's what I love to teach here, because that's what we should do. Keep compounding our money so it just continues to grow, so we could grow more wealth. So this was a really quick video that I wanted to go over with everybody. This is what I do: Bollinger Bands, VIX, and keep making money, make more money. So let me know what you guys think about this strategy. Let me know what you guys think. You don't even need to subscribe, because I'm sure I'll see you guys very soon. Peace.